Recording in progress.
Thank you for your patience. And the time is now. And I'd like to introduce to you our presenter today, hailing from Titletown, or as we know it, Green Bay, Wisconsin, the National FMO Account Executive from United Healthcare, Jerry Wagner.
Hey, thanks much. Do you have my audio?
We sure do.
Awesome. I am going to go and share my screen. Let me know.
You had it, just full screen it.
Can you see title slide? You don't see the one in the queue, you just see the title slide, correct?
Just your beautiful mug, sir.
Awesome. Awesome. Thanks so much. Hello, everybody. Happy Thursday to one and all. In the event that
And your audio cut out.
Healthcare. And looking very forward today to taking you through. I know we advertised this because we've got.
Jerry, we keep getting your audio cutting out again.
Is it cutting out again?
Yep.
I think this happened the last time too.
It sure did.
Let me. I might have to call in. There's a dial-in, correct?
Yes, there is.
Give me 1 second. I don't know if it's Zoom or.
Stand by, folks, online.
Welcome to Zoom. Enter your meeting ID followed by pound. Enter your participant ID followed by pound. Otherwise, just pound to connect. You have entered the meeting as a panelist. Attendees can now hear you speak. This meeting is being recorded.
All right, you guys got me?
We do, sir.
Awesome, awesome. Sorry about that, guys. I'm going to have to start using the phone with Zoom. We use a variety of different platforms, and yesterday I had no issues, but I guess today is another day, so we will persevere, that is for sure. All right, excellent. Jerry Wagner, National Account Executive. And I know we build this as an accident session today. However, you are going to get some bonus coverage because I've shifted gears a little bit. I want to include some other things, and I will get you to those products, and I will show you the top sellers to help maybe narrow down the scope of our plan offering. And if there's issues moving through the slides, just let me know. But quickly, our agenda. What I've added today to cover is I want to kind of do a baseline here in a reset on the current industry and market trends that we are actually seeing. We utilize a lot of different polls, a lot of different sources. They are cited on these slides, so everybody knows we are not making anything up. And then I want to talk a little bit about the long-term value growth opportunity with ancillary. Ancillary's expansion is one of the top priorities for United this year. And there's something that has just occurred that is really going to put the focus on that. And I will elaborate on that a little bit later. And then what I want to do is I want to break away from this actual slide presentation and talk about those solutions and those products that we promised to cover with you here today. So let's jump right into the agenda. I want to talk a little bit about the industry and market trends to kind of frame our session today. The first thing I want to do is I want to introduce a recent Kaiser Family Foundation poll, which asked the question, how worried, if at all, are you about being able to afford each of the following for you and your family? Now, you can see there's a variety of categories listed here, and the top two are highlighted. for obvious reasons, because that is kind of what we're talking about. About 3 in 4 adults say they are worried about being able to afford unexpected medical bills in the cost of healthcare. So if you take a look at the dark blue and then the light blue and combine those, for both of those categories, 3/4 of the respondents said that they are very worried about being able to afford these particular costs. And to continue to elaborate on that, there are a lot of consumers out there with unmet ancillary needs. And again, I know our featured products today are dental and ancillary, but again, you're going to get a bonus. You're going to get to see the full line of United ancillary products and the best sellers to navigate your meetings with your clients and hopefully build a nice comprehensive benefit package. But listed here are a variety of different services and the attached percentages on the percent who say they have delayed or gone without each of the following. 3 of these can be combined with one plan offering, and that's the DVH, the dental, vision, and hearing. So doctor's office, people choose not to go to the doctor's office because they're afraid of the cost. They're maybe afraid of having to pay $1 out of pocket. And then obviously hospital services, which is a big ticket item. You'll kind of get the theme here as we move along, because this is going to underscore the propensity to really focus on ancillary sales. Again, from Kaiser Family Foundation, we take a look on the top portion of the slide. This is a current synopsis of median liquid assets by household, breaking it down, multi-person household, single-person household. And then taking a look at the green bars on the bottom, which are the current maximum out-of-pocket limits in private plans. You'll see we're just under $10,000 for a single, and you might as well call it $20,000 for family coverage. So if you do simple math here, most household savings are less than the maximum out-of-pocket limits allowed for the private plan. So it's starting to put more and more of a strain on the consumer. Out-of-pocket costs are projected to continue to climb over a 20-year period. So if we go back to the year 2013 and we extrapolate that out to the year 2033, it is anticipated, they've already gone up 43% since 13. It's anticipated that out-of-pocket costs during that period of time would have risen 120%. So based off of the financial makeup of the consumer and different type of inflationary pressures, and based off of where out-of-pocket costs are going, it really becomes the fiduciary duty of a broker to offer a variety of different coverage options and let the consumer decide whether or not they want to pursue that or not. The question was asked in this particular poll, which of the following best describes how you would deal with a major unexpected expense, such as a hypothetical $1,000 for an ER visit? And the majority of these respondents would not be able to pay for an emergency expense of $1,000 or more from their savings account. You can see the different categories on how they answered, either financing it with a credit card, reducing spending on other things, borrowing from family or friends, taking out a loan, or miscellaneous. So again, we're hitting the point here that the big ticket items, ER, inpatient hospital, cancer, heart, stroke, those are the 3 driving factors of critical illness. All are big ticket items and continue to put more of a financial challenge to consumers that encounter those situations. So when we talk about ancillary sales, we're proving the consumer need. We have to develop a fact-based support and consultative selling approach. Leverage key health statistics. On the next 2 screens, I'm going to share more with you. We already talked about some of the financial statistics that you use to facilitate needs. And then the third one that I bolded, leverage personal life examples. Chances are this is a returning client that you might have, done business with for years and took care of their insurance needs. Maybe it's somebody new. They're coming off a group plan. Maybe they're an early retiree. Maybe it's a referral if you're utilizing lead systems. Perhaps it's a brand new lead. You have to learn as much as you possibly can. We deal a lot with cross-selling training. This is not meant to be that, but it oftentimes helps to get preliminary information up front to make that appointment as efficient as possible. I have distribution partners that use questionnaires. So they're zeroing in on income, health status, all type of census information, family history of chronic diseases, financial median savings. That way they're able to propose a complete benefit package opposed to just enrolling them in a health plan and moving on. That's transactional in nature, consultative in nature, and you're going to see some different things in here on cross-selling as we move along. Really builds a long-term value in client retention. So anyway, stats, hospital stats. You know, the national average is creeping up 5.5 days at 2,800 a day, and that's basically just for a bed. Doesn't count all the other charges that are going to come with it. You know, you're north of 15,000. You're going to blow through a individual out of pocket just with that particular visit. You can see all the first-time diagnoses under the critical illness stats: cancer, heart attack, stroke. The one that I always share is the 47% of critical illness claims are those under the age of 55. I worked a broker event last fall before OEP, and we just came out with a new critical illness product. Some of you maybe don't even know that. More on that to follow. And I was talking about that to this particular gentleman, and he said, we just deal with younger clients. It doesn't really pertain to them. I'm sure everybody, and this gets back to leveraging personal life examples. In the last couple of years, I know of people that have either fallen off ladders, so there's your accident, fell down the stairs, slipped in their driveway, snow blowing in Titletown. That is yours truly that actually did that and separated his shoulder. I know people, 2 people with severe diagnoses. I know somebody under the age of 55 that had to go inpatient for tests because he was having chest pains. So the sheer fact that somebody would think that, well, critical illnesses just happen with older people. Again, learn the family history, give the consumer the option to be able to take the policy or not. And then those accident stats, ER costs continue to go up. When you factor in ER urgent care office visit, you're north of 130 million visits per year. Non-medical type ancillary products. These are the easy ones to talk about, or at least they should be. I don't have anything on life insurance on here, but dental stats, 114 million people without dental coverage in the country. That's, if we, use 330 million, you got over a third of the population. The big one I like to use is that 90% of diseases show themselves in the mouth. Heart disease, diabetes can be easily detected. So you may just go in for a cleaning and an exam, but you are getting more than that when you do go to the dentist. So people should be going to the dentist. I know with ACA plans, there are some plans that embed dental and vision coverage. Many do not. So even with that ACA clientele, it's important to have that discussion. Vision stats. I myself use glasses and contacts. Over half the population has some type of vision impairment, and 80% of adults are using some form of a vision correction. We just kicked off New Vision. I'm going to include that in the dental. I know we didn't put that in the invite, but our vision coverage just upgraded to where you get both glasses and contacts. You used to have to choose in the old UH1 plans, either plan A or plan B. That is no more. So again, just some stats to kind of underscore the need of these types of coverages. And again, this is a consultative approach to try to broaden the ancillary. We're not upselling people, we're cross-selling people, which by definition is just making the original offer more of an enhancement. And the original offer is the medical plan, whether it be ACA, short-term, tri-term, fixed indemnity, what have you. It's not that difficult. And I just put these on the screen. Once you know a little bit about that client, if we're just taking a gross adjusted income, putting it in an EDE platform, congratulating them that they got a subsidy, enrolling them in the lowest cost plan and moving on, that leaves too much vulnerability in many, many cases. Even on low cost silver plans, I actually had a broker with a client with about $2,000 in total out of pocket. The client fell down, broke his ankle, went into the ER, imaging, and she's like, man, I should have sold him a low cost accident plan. Well, there you go. So anyway, just some hypotheticals. Mr. and Mrs. Client, how would you fund 5,000, 9,000, 18, 20,000? What do you mean, how would I fund it? Well, in the individual environment, the plan that we're going to put you with, which is your best fit, unfortunately does have some first dollar vulnerability. And if you have to use your plan, that's what you're going to have to come up with. What types of things concern you about the out-of-pocket? How have you used your plan in the past? Again, is there a family history? Have you been to the doctor? Anybody fall off a ladder, slip in their driveway? Are kids applying on this plan? Anybody with children on a plan should be offered accident insurance. And then, of course, how often do you go to the dentist? That's a no-brainer. 90% of diseases manifest themselves and show in the mouth. You should be going in for your annual or biannual checkups. And maybe you can see them, maybe you can't. Who in your household uses any type of correction eyewear? Get a full knowledge. I've got a distribution partner. We were talking about cross-selling one day. And I said, how long does it take you if it's a brand new person? You have no history with them. You've never written them. You've never renewed them. How long does it take you to get through your entire discovery, if you will, and offer a plan? He said it's down under 10 minutes because he does pre-work. He's got people that do the questionnaire pre-work. So when he goes in, he already knows his recommendation. He's got all the financials and health history. Or, and this is Jerry kind of being sarcastic, don't ask any questions. Enroll them in the health and move on. But based off of what we've already covered, the consumer is stressed from a financial perspective and they need help. And there are lower cost options out there to round out that coverage and really assist that client and insure them properly. Not over insure them, but certainly not under insure them as well. Okay, let's shift. That's the market and the industry right now. Those are surveys that are recent. They're saying the consumers, again, there's anxiety out there about utilizing their plans because they know it's going to cost them. So if somebody's sitting in the chair at night and they have chest pains, maybe I just won't go in and it'll go away. Bad move. So give the client the option. So here's the lifetime value growth with increased ancillary sales portion of it, because there is something in there for the broker as well. Now, this is our entire product line by product by average duration. Now, as you can see the asterisk on the bottom right, these average policy durations are a best estimate at any given point in time. These vary. The averages can differ between our distribution partners and based on certain criteria as well. So anyway, the point of putting this out there is, Jerry, you're telling me there's more long-term value in it in just a 12-month proposition. What does adding ancillary do? And you can see most of these make it to 2 years before they cancel. And again, the individual market is a transient market. People come in and out of it. You got early retirees that are going to age into Medicare. You got somebody maybe loses their job, needs some temporary coverage, and then they get a new job. Somebody comes off a group, decides to start their own business. People are in and out of this market. So these durations shouldn't surprise anybody. I always remember in the olden days, the average duration of a major medical, I'm going back prior to 2014 and prior to 2010, with the advent of ACA, our underwritten major medical individual plans lasted 18 months. I always remember that, 18 months. So again, people come in and out of this market. So these are some pretty good durations on these plans. You can see vision, the term life, critical illness, dental, those accident plans, all strong over a year and a half. And then the short-term medical, which is around 6 months. So higher persistency, since we're on the topic of persistency, EFT will improve your stick rate by over 20%. We got a ton of data to prove that. That means the funds are verified. They're not losing a credit card. It's not getting stolen. It's not expiring, all of which I hear all the time. It's just a better way to secure the mode of payment, the financial state of the client, them understanding what is being sold to them, not oversold, but again, a proper benefits package. This is a hypothetical as well. This is an average 2022 eHealth ACA premium. The total premium is based on a subsidy. The LTV does include an EFT, and this commission and any type of bonus is blended, somewhat hypothetical because everybody's situation is different. But the point of this is with two ancillary products, a dental and one of our accident plans, you boost the LTV commission by 109%. Now, some of these premiums that we're going to see, you might be thinking, Jerry, $9 a month, $12 a month. I mean, how can you make any money on that type of premium? The whole idea behind this is to build the consultative approach and get disciplined in offering it, and your cross-sell ratio will go up. Once you start adding those commissionable premium amounts, they do add up. I did an exercise with an agency, and that broker asked me in person that, and I said, how many ACA short-term plans did you write? He said, I don't do a lot of short-term. I do a lot of highly subsidized clientele, about 300 during OEP. So 33% cross-sell rate, which some of our distribution partners that are on the higher end are north of 50. Take a look at 100 blended ancillary sales, and we added over $30,000 to that scenario. And the person is like, well, that actually helps reduce my marketing costs, so I probably should be doing this. And it's not only about the broker, right? It's about the client as well, taking care of the client. I share this because the other thing we hear is my clients don't have any money. I deal with highly subsidized clients. What this slide is from our own call center data. On the bottom, as we work left to right, those are household income levels. See, it starts from 0 to 25 grand, and then way on the right, we're north of 200,000. That is a percentage of sales on ancillary that we get from those household income levels. So you're going to notice over a third of the ancillary sales in our own center are coming from households making under $55,000 a year. And that remains consistent across all ancillary lines. Maybe it's somebody who just wants a dental and vision because they don't have one with their ACA plan. If there's an old saying, no ask, no get. If we're not asking and we're making that assumption that they just don't have any money, again, it's a fiduciary responsibility to ensure they're properly insured. Ironically enough, a lot of the people that say I can't afford that are walking around with the newest iPhones, and they have a subscription to Netflix and Amazon Prime and all that. But again, it's just making sure that they know what's out there. In the spirit of UH1 ancillary and why we're spending so much time on this in 2024, it's starting to grow. Back in 2010, when the bill was signed into law for ACA, we had one ancillary product. It was dental. And I remember having to go and present, trying to get somebody to sell a higher deductible health plan so they could use the premium and buy dental. It was one plan. We didn't sell much of it. Now we have a full suite. If you take a look, obviously I don't categorize the numbers on here, but it's in the bar graphs, vertical bar graphs. Dental and vision are the two top sellers. Some of these other ones, or somebody's got to get into a discussion about out-of-pocket costs. They're starting to go up, but we still have work to do. And that's what I'm talking about, the accident, critical illness, and indemnity plans. But they're starting to climb as well. I just took this off Google. So cross-selling, providing value across the board. Where I got them from is right underneath. You'll see the Salesforce, the LinkedIn, or whatnot. But just some stats to consider. 5 to 15% of business-to-business customers buy more than 2 products from a company, leaving significant opportunity to cross-sell strategies. Companies that use cross-selling tactics achieve higher customer retention up to 90%. That's the other thing about this. I've got in May 2 automobiles, a homeowner's, a life policy, and an umbrella, all coming due. What is that? Five different policies, 5 different products. I've got it with the same person. I check it every year. But for me to move all that, a lot of time and effort. So anyway, the whole thing about cross-selling is client retention, not only income, right? Income stream increase. Effects of cross-selling. Main benefits: sales revenue, improve customer satisfaction, and the business to business increase lifetime. There's that lifetime value again through deeper integration in a customer's business. Is cross-selling profitable? That's a no-brainer. And we just showed you kind of a hypothetical example. Is cross-selling good or bad? Valuable business strategy to increase revenue and enhance customer satisfaction. So I think you get the point, but I thought it would be good just to add some of that in as well. So let's move on now to the solution. And this is where we're going to talk about the plans. Couple of things here. When we talk about these plans, we differentiate them by our core medical offering. Okay, these are only for 365. Tri-term medical, short-term medical, and our Health Protector Guard fixed indemnity. The common denominator with all three of these options are the last bullet point, if you will. We use UHC's nationwide network with the heavy discounts in that PPO network. So no matter what option you go with here, they don't get a scaled back HMO offering. Some of these plans will cover pre-X after 12 months, some never cover pre-X. Now this is the slide where I said I have more information coming up. The short-term ruling, in the event that you don't know this, so that's the elephant in the room, was issued this morning. I would suggest going out to CMS and reading it. United has not offered a comment or any type of strategic goal messaging on that. Again, we just learned about it again this morning. I will say it looks like September. September is the target where the sale of these plans as they are today may end. That puts in a buy now strategy. Look for more information on this as we move forward. Don't want anybody to panic. Fixed indemnity is included in that ruling. The last time this happened, I believe it was Washington National filed suit. It won, and fixed indemnity stayed whole. So right now, it is business as usual. I will say this. Once we interpret the ruling and cement that that is the date, there will be a big campaign, a buy now strategy on tri-term medical to lock in as long as you possibly can. And perhaps we all know we're in a election year. Maybe at some point in time, just like in the past, the 90-day limitation on these plans gets blown back up to a year plus. Anyway, I thought I'd share that right now. You guys go to CMS, check it out. All right, UH1 ancillary products. This is what's exciting, and this is what a lot of people don't know. People think of UH1 as a pre-65 carrier. You'll see pre and post underlined. I'm going to show you something here in a second. These are the accident, critical illness, and fixed indemnity plans. All of them include guarantee issue options. Okay, there are two new plans, critical illness and the Advantage Guard. For those of you that are in the Medicare world, look at those issue ages, 18 to 90 on the CI, 60 to 90 on that Advantage Guard, which is a hospital indemnity plan, which was made to sell alongside an MA plan to eat up some of those copays. And now we have an accident plan that kicked off earlier in the month of March where we can get up to issue age 75. We are now playing in the senior market. And then, of course, we have our non-medical, the dental, vision, both brand new, issue ages up to 99. Again, we're playing in that senior market. And then, of course, our term life and then all the telemedicine. Before we jump into the portal and I show you guys some of the best sellers, this is always important to put out there. Our broker services, you guys are checking status on apps. You know, e-store issues, it's always a good avenue. Clients, if clients are changing billing payments or they want to print a card, the member portal for tri-term and short-term is myuh1.com. Bottom right. That's for tri-term and short-term where they can manage the price. They got to change their address, phone number. All of our ancillary plans are on uhcmemberhub.com. uhcmemberhub.com. Eventually, those two mainframes will have everything all in one, but that's how that consumer can manage their plans. And of course, you can see their client service number for client services. There's my information. And again, it's not over. We're going to go live to the portal now. So that is my information in the event you need it. You can see my phone number. It's jerry.wagner@uhc.com. Very easy to remember that. and I'm going to transition. You're going to see some arrows there before we do any type of quoting or I show you any plans. I definitely want to show you those resources because we've just added some things with that. So you guys can tell me, you should see the portal right now. If not, please let me know. But I've just transferred to the portal. So a couple of things here. I'm logged in as a broker. It's our e-store, www.uh1.com/broker. I'm going to go to this tab. These are the ones that we had some arrows on. Brochures and sales tools, very important. Put in your state. I've got a hypothetical zip code I'm going to use today, so I'm going to pick Florida. Product categories, you just have to, we're going to talk about dental today. So if I pick on dental, there's my brochures on the different dental plans. Look at this, got them in Spanish. A flyer that you can use, sample policy certificate, all kinds of good stuff. I want to show you guys some new ads here. There's new ads in the opportunity and resources section. You're going to see sample application questions. Down here, you're going to see actual claim forms. We didn't have these before out here for accident, critical illness, hospital indemnity, all kinds of good stuff. Spend some time out under this broker sales tools and training. Additionally, webinars on demand. I'm not going to do a deep dive. I kind of get glazed over in the eyes when I'm watching webinars and somebody's reading me a product grid or a product brochure. Everybody can do that. You can get that from that tab. But do know our marketing team does a great job in getting into the detail on every single one of our products. They're all out there. You can click on them. They're brain sharks. You can watch them whenever it's convenient for you to watch them. The other thing that I want to do before we get out there, I want to make sure we got plenty of time because I want to show you a couple of different things, not just accident and dental. This is the product grid. If you saw, I clicked on the hyperlink under the map of the United States. This is going to change with every product rollout we do. Even if we just expand into one state for one product, this gets updated. I always recommend to print this off and have a copy. I know it's a very busy plot or a graph, but it or chart rather, it shows you broken down by product type, short-term, tri-term, ancillary, indemnity, by state, if there's any variation on durations by state. I know many of you are multi-state, selling non-resident. It's a handy tool to show you what we have and where we have it. All right, let's jump in. Orange button, get a quote. So I'm going to show you some plans. I'm going to show you some of the best sellers, and I'm going to tell you by percentage how much of a bestseller they are. I am going to pick sunny Orlando, Florida. Hypothetical quoting there. And the first thing I'm going to do is I am going to quote a Medicare individual. And this person, if I got my dates right, is a 66-year-old. Now, you know, when I put that census in, it's not going to give me any plans for somebody that's under 65. It's only going to give me the plans for somebody that's over 65. I want to spend a little time. Here comes the extra bonus stuff that we weren't going to talk about, and that we can do separate sessions just on this. This is the Advantage Guard Hospital Indemnity Plan. I just worked a broker event last week where brokers didn't even know we had this. It came out under the cloak of darkness December of last year. I know the timing was bad. It's just when the filing got approved. This is ideal to sell to an MA customer. The dental plans, vision, accident, look at all this, all for a senior in the Medicare space. I do want to show you this plan though, and then we're going to jump to a 30-year-old and I'm going to show you specific plans. But if I go into view plans, what it's going to do, it's automatically going to quote the guarantee issue option if it decides to move for us. Hopefully it does. There we go. So this is a 66-year-old. It's a base benefit of $400. This stays within the guarantee issue realm. It's $30 a month. Inpatient confinement, 4 days, $400 per day. You can alter this, obviously. Okay. You want to go into simplified issue and get this person higher dollar per day amounts, you can do that. You can see it goes up to 1,000, but we stay in the guarantee issue at 400 a day. Standard benefits, inpatient hospital confinement, sickness injury, observation in lieu of confinement, and then some mental and nervous disorder benefits. Comes with an Optum Perks card for discounts. Here are all your optional riders: ambulance, ER, outpatient diagnosis, skilled nursing, outpatient surgery, cancer benefit, wellness rider. Some of these will require the underwriting. Obviously, if somebody's had cancer, they've had heart problems, they're gonna go through underwriting. You don't pick some of those, you can stay under those guarantee issue amounts. I had an uncle approximately 5 years ago on an M8 plan. I didn't know anything about Medicare at the time, and I was kind of looking at my aunt's insurance for her. Skilled nursing facility, and he went north of 20 days, and I got asked what the copays were. I wish I would have known, because I know now. That's a great benefit to add on to some of these hospital indemnity plans. Here's the other cool thing: plan recommendation tool, big blue bar. I'm going to click on that, because if you look into this, you're going to say, Jerry, there's so many different options out there for that plan. Well, obviously we'd like it to be UHC, United Healthcare, but look at all the different plans out there. If you happen to sell another MA plan, we are going to click on United Healthcare, and we're going to click on the name. I don't really know much about these, but I'm going to take the first one. I'm going to click on that, and it already brings up a plan recommendation based off of the carrier in the MA plan that I chose, which most gets closest to these potential holes in the plan with these particular payments. It's a very slick tool, and it saves on a ton of time. All right, I'm going to go back here, and I'm going to change this to a 30-year-old, which is a very popular age demographic. So now we've got all the plans for a pre-65 individual, and there's a lot of them. So let's clear that up. I don't want to spend a ton of time up here, but I'm going to show you this. I'm going to show you the copay max, because it is 73% of our tri-term sales, 73%. I'm going to click on the Plus Elite short term and the value, only to make 1 point, and we're going to go down. We're going to take a look at these plans, and then we're going to uncheck those, and we're going to talk ancillary for the remaining 20 minutes of our session today. So one thing this does, you guys probably already know this, it defaults to the highest deductible. I don't want a 12,500 or a 15,000 deductible, so I'm going to edit some of this stuff. The tri-term plan, our top seller is $5,000. I'm going to make that a $5,000 deductible. It comes with 4,500 full insurance, so you're just under 10,000. You might want to think about some ancillary to facilitate that. Oops, my bad. I clicked on the wrong button. I'm going to go back out to view plans, because I want to alter some of the default things on those short-term plans as well. So again, I apologize. This will just take me a second. I want to change that to 5,000. I want to click on my overview tab. That's what I did incorrectly. I'm going to go to this short-term value plan. Now, a value plan comes with co-insurance. So let's change the deductible to 5,000. You don't want to go too low. The premiums are going to get a little high, because it does come with $10,000 of co-insurance. So there's the 10 grand. It's defaulting to 6 months. What are we? We got probably 8 months left to go in the year, but let's take a look at a full duration premium here. $200, but there's 15,000 of out of pocket with this option. This is the best plan in the short-term family. Between this one and the value, both of them together make up 77% of our short-term sales, the value and the elite. And this one is the leader in the clubhouse, because once you meet this deductible, I'll try to keep it affordable. I'm going to pick 7,500. Once you hit the deductible, zero co-insurance for the client. We pick up 100%. It's the cleanest and neatest plan. And if you think about it, actually that one, because I went 7,500, I think that turned out to be even a little less in this scenario because of the co-insurance. But again, to me, it's a no-brainer. Now, given what's going to be coming at us, and you're sitting down with your clients, they might want to consider a 3-year option. Lock in as long as you possibly can, and then let's let the chips fall where they may. Maybe that ruling gets overturned, and then you can figure out their best option at that time. If it's me for this amount of money and I can afford it, I'm going to lock in as long as I can. All right, let's talk about ancillary, because that is why everybody wanted to join, but I thought I'd tell you. Yeah, incidentally, you can only quote up to 3 in each plan family. I hear some people say, well, why do you do that? I know what the best sellers are. Why do I have to quote more than 1 or 2, quite honestly? Those are our best sellers right now in these core medical plans. Also, I will comment on the Health Protector Guard. If short-term does get altered and somehow FI stays intact, this is going to become a massive go-to. It happened last time. I will tell you, this is our top seller. These are fixed indemnity plans that pay $1. We've got a distribution partner that sells a lot of it, and he sells the top wellness package and the top premier. Let's just take a look at the premiums for the heck of it, because there's stop loss, right? With these fixed indemnity plans, I have not heard from him once that he's had stop loss situations. There's concierge services in there that can help negotiate bigger bills. And he also sells critical illness and accident and wraps high limits around this plan. You can see for a 30-year-old, $144, that is not bad, just as long as they understand what they're getting in that plan. And again, I would not sell that by itself. I would package, stack, bundle, whatever you want to call it, to protect that consumer. So then we've got some of the other ancillary plans. Here are the new ones, and this is what we were going to feature today. The Dental Wise plans are standalone dental. The Dental Wise Max are DVH plans. So you're going to get vision and you're going to get hearing in that as well. We're going to quote 3 of them. These are our best sellers right now. Surprisingly enough, that Dental Wise 3000, that basically tells you what the annual maximums are: 1,000, 2,000, 3,000. The Dental Wise 1000 makes up almost 40% of the Dental Wise sales. The Dental Wise Max, the DVH, 46% of those sales are with that 3,000 top end annual max. Again, premiums are going to vary by area. The 1K and the 2K are pretty much split even. The other thing I want to do, just to show you what a standalone vision is, I'm going to include that in this, because we have a lot of distribution partners that do a lot of ACA business, sell a lot of standalone dental and vision, because in the scenario where it's not included in an ACA plan. Again, I'm not doing a deep dive into the benefits today. This is just to basically tell you, based off of 50,000 brokers, give or take, not all of them are active, what they are actually selling to try to steer you in the right direction. So you can see a DVH plan for a 30-year-old male, $28. Standalone vision, these benefits on this plan are the same in the DVH plan. You can see the 1,000 annual max, 3,000 annual max. I will actually click on this brochure to show you the grid. Again, all available for you on the portal. Here they are. This particular brochure has all the 1,000, 2,000, and 3,000 max plans on there. You can see the preventive, 2 routine exams per policy year, 100% coverage. Basic services, it goes to 60 with no wait. After deductible, 80% in the second policy year, so there's retention benefits in this as well. And then your major services for your bridges, crowns, dentures, and all that, 15%. Policy year 1 after deductible, up to 50%. Implants are covered on some of the plans, 1,500 maximum for the lifetime with a 12-month wait. And then you can see the dental plan, or I'm sorry, the vision. This is really a nice plan. $0 for the exam. You can see, depending upon the lenses, right? The copays listed out, all of them are the same there. $150 allowance for the frames, and then a $10 copay up to $150 on the contacts. And the hearing benefits, again, this plan transcends into the senior space. No waiting period, 100% for the exam. Every 2 policy years, they get an allowance of $750. This is a top-selling dental plan, meaning the 3,000 limit. And these two are about 50-50 split between the rest. So as long as the premium isn't that bad, 3,000 is the way to go. $47 for a 30-year-old male in Orlando. If we then talk about our accident plans, and I want to steer everybody, I heard it twice at the, or at 2 different sessions last week at the agency event. You guys got way too much stuff out there. All right, well, I get it. Our product people are pretty proud, but accident-wise is brand new. We took away our old accident safeguard. The top selling accident-wise plan is the 10,000, and that basically is showing you or indicating the inpatient confinement. And we'll take a look at this brochure too, but 51%, over half, is on this accident-wise, and that's a newer plan. The Accident Pro Series, so we've had these a while. I'll tell you right now, the Expense Guard is a big seller, and actually the $20,000 benefit, and I'll show you that. The Pro Gap comes with some critical illness benefits on a lower side, and then the Pro Guard, which is a simplified, underwritten accident plan. These three right here are the top sellers. I'm not telling you not to propose a $15,000 or $20,000 accident-wise. The Pro Guard is a big, big seller, even though they're simplified underwriting. These two right here are guarantee issue. So if we want to take a look at what those rates look like, you can see the accident-wise 10,000. Let's take a look at that brochure. That's a newer plan. Again, that's the one we were going to feature today. We've got all three of them here, the 10, the 15, and the 20. You can see it basically indicates what that hospital admission is going to be within 30 days of that injury. 10 grand, 15, 20. Obviously, if they're on a short-term plan, I was quoting before, 15,000 of out-of-pocket, 7,500 on an elite plan. That's more than enough to be able to take care of that deductible. And then you can see the corresponding amounts as you go down for the various treatments and the time period of which they need to utilize it. ER, urgent care, diagnostic exam, follow-up, outpatient surgery, and then the accidental loss of life, limb, or sight. This is the accident-wise plan. The Pro Series plan, right here, quoted the Expense Guard. This one, if you're looking for a higher accident amount, these are lump sum plans. You notice on the brochure of the accident-wise, this just is going to pay you out the benefit amount minus a $250 deductible or whatever. We just obviously need that. The claim form again is on the portal. You saw that. We just added that. I am going to alter this, and let's go and let's take a look at 20,000, because again, on this particular plan, the 20,000 is 32% of our sales. The 5,000 is 33%. So right there, you're at 2/3 of our sales are on this 20 or the 5. Many are taking the high end, many are taking the low end. $20,000, $16 a month for this individual. And then if we want to take a look at the Pro Guard, which is a simplified underwriting one, and the reason why there's some underwriting here, it's coming with critical illness at a minimum of 10,000. You can go up to 50 grand if you want. Actually, 10 is the most popular. 50 is the second most popular on the CI. I'm going to leave it at 10, and I'm going to change my accident benefit to 10. So you get 2 choices. Also comes with a matching accidental death benefit, $13. Again, there's a lot of options. My advice, right, in this questioning, and I want to show you these hospital plans too, I would keep it simple. If I've got an ACA client, low income, I'm going to protect him from the hospital, and I'm going to protect him from accident. If that individual is worried about critical illness because there's a significant family history, I'm going to add that in there. If I've got somebody with a little bit more income, because as you grow older, obviously, these premiums are going to be a little bit higher. I'm picking a lower age demographic because it's a popular one, but also in this area, it's very economical. But these are the 3 best accident selling options that we have. So back when you think about that slide where it said, well, I just can't afford it, my clients don't have any money. We're not talking about, you know, breaking the bank here. Protect against some potentially high out of pocket. So the other thing I want to do is I want to show you guys, we talked about that Advantage Guard, which is the hospital indemnity plan for our senior clients. I want to show you this other plan that came out at the same time last September that a lot of people don't know about, and it's the critical illness. And again, it's issue ages 18 to 90 with guarantee issue options up to age 74. There's 4 different plan families here: cancer, heart stroke, cancer, heart and stroke, full-blown critical illness. Everybody, 73%. I'm sorry, wrong stat. I was using some accident stats. 85% of our critical illness sales are on the full suite critical illness plan. 85%. That means these make up the other 15%. Feel free to quote these. I do want to show you how crazy affordable this is. Now, I realize this is only a 30-year-old who might not be thinking about critical illness, but if I go into this and I'm like, look, I'm going to cover this guy's out of pocket. Let's say he's on an ACA plan. Let's say he's on a $7,500 or a $10,000 deductible short-term plan. I can get him a guarantee issue critical illness plan for $5 a month. Now, if there's significant family history and perhaps he had a sibling that had a nasty diagnosis when they were in their 30s, which is not out of the realm of possibility, and he wants higher amounts, it is simplified underwriting, basically asking questions about the health history, significant health history. It's $20 a month for the 50. There are optional riders on there as well, even a wellness rider. So I wanted to show you that because it's another little known gem, perhaps, that brokers just didn't know about because of the filing time, because it was late last year. And then the other thing I want to show you before I show you, I want to send some of these. So here's what I'm going to do. I'm going to go, so these are guarantee issue hospital indemnity plans. I'll quote both of these, and I want to quote an accident plan as well. I'm going to take that expense guard, which is very popular. And I want to view these. And then I want to show you the preferred method of submission. Everybody should know about it. It's been a year since we introduced it. So left our critical guard in there as well. That's okay. So I'm going to change. First, let's do this. Let's focus on the hospital safeguard GI 500. It basically pays $500 a day inpatient hospital. This particular plan is going to come with hospital services, $500 a day, and then you can see each plan goes up. Additional reimbursement for ICU, a $1,000 a day, first-time hospital admission, inpatient surgery, anesthesia, ER, ambulance, and then some outpatient things as well. So a lot on that particular plan. That's the safeguard. The guard plan, not to confuse you, is just a simple inpatient hospital reimbursement. You're not getting any outpatient stuff with this. It's all inpatient. If you pick the A plan, which is most economical, you're going to get $500 a day reimbursement. If you go inpatient hospital, you're going to get an additional $1,000 a day if you happen to be in the ICU, and you're going to get $1,000 for admission. That's a nice chunk of reimbursement if you're taking a look at out of pocket. This is the one without the outpatient. That's why it's more economical. You're talking $19 a month versus the $56 a month with that one. So let's talk hypotheticals here. Let's say I've got an ACA client or a short-term client. They're facing around $10,000 of out of pocket. I'm going to give this person 10 grand. This is a lump sum reimbursement for accidental death and dismemberment for $12 a month. They're not overly concerned about critical illness at 30 years of age. They've been in the hospital before and they know what type of cost that can bring to the table. So for $19 a month, I'm going to put them on that hospital indemnity guard plan. That's a total for this individual of $30 a month. Now, we haven't done dental. You know, you can obviously, I don't want that one in the cart, but we're going to go to the shopping cart because I want to show you guys something. This might be redundant. I am going to take the, it's just got a guard, $31.13. And then, of course, you can go ahead and you can add in the DentalWise Max 1000 if you want dental, vision, and hearing. Maybe he just wants a vision, standalone vision, $13. Very easy ads. But just for the purpose of this is the checkout. You can send this card to the prospect right now if they've got a meeting to go to, or maybe they're going to work or something. If at all possible, you stay with them. You proceed to the broker-assisted app. There are two options. There's assisted email text e-sign. This is the traditional. We've had this for quite some time. You fill out all the information and send it to them. Then you're dependent on them filling it out. I mean, you could be on the phone with them if you like. Here's what I suggest. 2/3 of our sales are coming in. This is the security question. We kicked this off last March. Basically, you establish 2 security questions with the client. It's like, what street did you grow up on? What was your best friend's name? What was your pet's name? They answer the 2 questions. You do have to read verbatim these attestations. By doing that, they give you the right from cradle to grave to take down the information, propose the plan, and submit the application. They do get a copy of it, obviously, emailed to them, but they don't, you even put in the banking information. They don't do that. So that one is the quickest and the easiest way, the assisted application security question. I know that was a lot of product, but it's not as much as what was there before. I'm hoping this was a benefit for you guys. First of all, to kind of see at a glance what's happening in the industry, what the consumers think about what's happening in the industry, the stress on the out-of-pocket, and a lot of optionality that we actually do have between these plan families to customize a nice little benefit package for that of your consumer. And again, what I would do, reach out. I can get you more information if you want. Grab a couple of options for your client. I listened to a call the other day that came to the call center where a gentleman enrolled a family on a short-term plan and put one of those hospital plans in one. That's why I chose them. And one of those expense guard plans on there to build a nice little benefit program. And that client knows if they or their family has any issues in terms of accidents or they go inpatient hospital, they are not going to get stuck with the entire out-of-pocket. So I want to thank everybody for your time today. And again, please go ahead and utilize myself, if at all possible, on any more of these suggestions. But with that, gang, that is the content for today's session.